Hey everybody, welcome to your daily trading coach. My name is Nick Pham, and today's tip is going to be what it takes to be a master trader. So, before I get started, I just want to let you guys know that most people who try to trade are gambling. And that's because they trade without a plan, they trade with emotion, and they trade without strict money management. Because when you trade, you're risking your hard-earned money. And if you don't have a plan, the market could go easily down and take away any of your hard-earned profits that you've had throughout your trading week. So, let me begin by first going over the 4 things that you need to become a master trader. Number 1, let's take a look. You need to master your mechanics. So what does that mean? Mastering your mechanics is how to enter your trade on a trading platform like a professional. Most traders will trade using a market order, which is what you do when you just want to buy it right away. But a professional trader is going to use what's called a buy stop order. And a buy stop order allows you to wait for the trade to come to you instead of you chasing the trade. That way, you are waiting for the stock to bounce and reach your price before you buy it. Instead of catching a falling knife, which is what a lot of people do, they buy it at the market and the market continues to go down, 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 and they start off a trade with the loser. At Teach You to Trade, I show you how to wait for it to bounce and then let the trade trigger you in to confirm the bounce. And that way, you know exactly what price you're getting in at, but more importantly, you know exactly where to put your stop loss at. Because if it goes back down and breaks through your support level, you need to cut your losses short because obviously that bounce was a false signal. So that's step number 1, is how to master your mechanics. And let me just quickly show you how you can do that on a trading platform. So I'm just going to open up my Thinkorswim platform here, and let's take a look. So here, let's take a look at Apple. So if we look at Apple, you can see the stock is currently trading at 209. And let's say we want to wait. Instead of buying it right at the market, let's wait for it to break through some resistance. And let's say we buy it at 215. I could just right click, choose buy, and since I don't want to buy it right away, what I'm going to do here is change this order to what's called a stop order. And it will make sure that I do not buy it until it reaches my stop price. So let's say I want to buy it at 215. And what you want to do is change it to good till cancel, because we don't know if it's going to happen today. It might happen tomorrow. So we want this order to wait until the stock actually confirms that it's going to break out. And here's a key tip. Number 1, once you master your mechanics, you'll know how to set your stop loss and your profit target all at the same time. So what you're going to do here is go down to advanced orders, click on first triggers OCO. That means that if this order is triggered, meaning the stock actually hits your price, you can actually put in your stop loss. A lot of people don't know how to do that. So I'm just going to right click, put opposite order. This tells me that I'm going to sell 100 shares of Apple. If it hits my stop price, let's say I want to risk $5. So if it gets down to 210, I want to get out of this trade because I don't want to hold on to a losing trade. You got to treat trading like a business. If a trade is not going in your direction, you got to fire it and then move on to the next trade. Because not only will you be losing money, but you're going to be tying up that capital for other opportunities that can present themselves. And there's thousands of opportunities every day. If you're a day trader, you can look at pullbacks. If you're a swing trader, there's always going to be a better trade. So you don't want to get your money tied up in a loser, because you're going to lose and you're going to get your money tied up. So that is your stop loss order. Now, let me show you how to put in your profit target. So I'm going to go in here and now I have to sell, right? So now let me sell it at a profit. So you need to change it from a stop order and choose limit order. Limit means sell it if it hits this price that's higher than where I get in at. So if I want to risk $5, here at Teach You to Trade, I need at least a 2-to-1 risk to reward ratio. So if I'm risking 5, I want a $10 reward. So if I'm buying it at $2.15, add $10 to that, and you're gonna get $2.25. Easy, right? Confirm and send, and this is how you set it and forget it. This is how you enter a trade like a professional, not a gambler. Because here you have your risk defined. You're no longer gambling, and in case the stock goes against you, you're going to lose a lot more than you planned. Here you're defining your risk at $5 a share. If we're buying 100 shares, you're risking $500. Your target is $10 away, so you're trying to make $1,000, risking $500. See how it says order description, buy 100 shares if it hits my stop price at $2.15 to open the trade. And then order number 2 says if it's triggered, this first one is triggered, I want to sell it if it hits my stop loss price at $2.10, right? Triggered by number 1, and this is going to be to close the trade and then sell this to close. So if I click send, notice this is how you remove the emotion from your trade. This is how you wait for the trade to actually hit your price. Once this is triggered, your stop loss and your profit target are linked. And whatever hits first is going to cancel the other order. And let's say you want to remove your risk from the trade. What you could do is you can move your stop loss up. See that? Most people don't even know this trick. Once the stock moves in your favor, let's say it goes up $5. Now you can take the entire risk off the table by moving your stop loss up to the price that you bought it at. Now, if the stock goes against you, you won't lose any money. Just let the profits run. And then you can move your stop loss higher and higher to lock in your profits. That is skill number 1. Now, what I'm going to do is show you what the second step to mastering your trade is. Before you even pick what stock you need to do, first, you need to master your mechanics. Second, you need to master your mindset. And by mastering your mindset, this is key to your success. People say they always want to find the holy grail of trading. There is no holy grail system out there. I'm going to tell you the truth. The reason why 4 out of 5 traders lose is because their emotions get the best of them. Because the market will do exactly the opposite of what you want it to do. Believe it or not, most people buy at the worst time and they sell at the worst time. So in order to be disciplined, to execute your plan, you need to make sure that your mindset is in the right place. You need to know what your expectations are. You need to know what your long-term big picture is. You're not trying to hit a home run. All your money should not be in one trade, but you're spreading your risk over a lot of trades. You're going to trade small, but you're going to trade often. And this is where we lead to the third skill that you need to master. And this is called mastering your money. Your money, your capital, is the number one thing you need to preserve. Preserving your capital is key, because if you lose your capital, now you no longer have that buying power to take advantage of opportunities in the market. Because trading is all about recognizing opportunities and being prepared to take advantage of those opportunities, right? They say luck equals preparation plus opportunity. When opportunity meets preparation, that's when you can profit from the market. How do we do that? We use our mechanics, making our trades, building it. We use our mindset to make sure we execute the trade, knowing that it's just 1 out of 10 trades. And then 3, you use strict money management rules. Let me give you an example. Most people think trading is about being right. That's the furthest thing from the truth. Trading isn't about being right. Trading is about being profitable. What if I told you my system, I'm only right 40% of the time, but yet I still make money? Do you know how you do that? It's all about risk to reward. There's no other place when you go to the casinos can you get paid 3 to 1, 4 to 1 on your money, unless you have like a 3 or 14 parlay, right? And that's really hard to do. But in trading, you could risk $1 to make $3. How do you do that? So here, let me show you again, looking at a stock chart. We know that stocks do not go straight up, right? So in this example, actually, let me show you here. In this example, if we're risking $5 to make $10, let's say I'm right out of 10 trades, I'm only right on 4 of them, 40%. 4 times 2 is what? Because I'm risking $1 to make $2. In this case, I'm risking $5 to make $10. So if I have 4 winners, 4 times 10 is $40. Now, my 6 losers, I'm wrong 60% of the time. 6 times $5, remember I'm risking $5 per trade. 6 times 5 is 30. Now let's see, $40 of profit minus $30 of losses, your net $10. Now do you see why trading is a lot more profitable than gambling? People who trade the markets are typically gamblers. They don't know about money management. They just go to the casinos and blow their wad the first day, and then they're trying to catch up for the rest of the vacation. To trade consistently, you need to make sure that your money management is in line so that you can withstand the small losers and let your winners run and take care of the small losers. Amateurs do the opposite. They like to take their profits quick because they don't want to give it back. But then when the trade goes against them, instead of cutting their losses short, they hold on to it, and their losers become bigger and bigger and bigger. And then one loser wipes out all of their winners, and then they end up saying, this is not for me. Well, I'm telling you, you have to do the opposite of that. That's why earlier I told you in trading, you actually have to do the opposite of what your human emotional instinct tells you to do. Because all throughout life, we're trained, you need to get 90% right to get an A. We're trained always to be right. So therefore, when we put our money in the markets, we always want to be right. So when the stock starts to go against us, our ego gets in the way. And we hold on to it, praying that it's going to come back. But guess what? All you need is one trade not to come back for you to wipe out all your gains. So that is the key, money management. Right there, I just taught you 3 golden nuggets of trading that I learned the hard way, but I'm here to teach you guys what I've learned so that you can avoid the costly mistakes and be on the path to profitability in the shortest amount of time possible. So the last thing that you need to master is your method. You need to have a strategy that allows you to make money whether the stocks go up, the market goes down, or better yet, if the stock just stays within a range. This is where I'm going to teach you my 5P high probability method, where it combines price patterns, right? Stocks have patterns. Because it doesn't go up in a straight line, you can take advantage of the patterns that you'll see throughout the markets. Because patterns and prices are nothing more than supply and demand. And if you know when a stock is coming back down to a level of demand, or we say support, and it starts to bounce off of that support, well, now you can buy the stock at wholesale, at Costco. You know, I have friends that work at Costco. You get it on the cheap, and then you go sell it at Whole Foods, and you get that markup, right? So buy low, sell high. And the second pattern is when it breaks out of a resistance level. So if a stock starts to hit its head, let's say at $100, and then all of a sudden it breaks through it, that's when you want to hop in, because it breaks through, it attracts new buyers that are waiting for it to break through. And then it also causes people who are shorting the stock, they have to buy more to cover their position, giving it more momentum on the way up. So you need to create a method. I'm going to combine technical analysis with probabilities, and probabilities is what the options market is about. Many people, when they hear the word options, they think it's risky. They think options are like gambling. And you know what? It is, because options are nothing more than bets on stock. I'm going to show you why options are better than stock. Let me show you a quick example. Let's say you wanted to buy Apple. Apple would cost you $210. So let's say I wanted to buy it, right? So anytime you want to buy, you could just right click and click buy. And if I wanted to buy 100 shares of Apple, you know what? Let's just make, 100 shares of Apple. How much would that cost me? That would cost me $156,000 of buying power. It actually would cost me more than that. It would cost me $21,600. Actually, here, you got to move the decimal 2 places to the right. Yeah, about 21,000. This is because there's margin. So, you know, I think they assume you have a 2-to-1 margin. Don't worry about that now. But who has that money? You know, most people who create wealth in the stock market are already wealthy. You can't participate in this if you don't have $50,000 or $100,000 in your account. So I'm here to teach you that you can trade with as little as $2,000 in your account. Watch. Let's say I don't want to buy the stock, but I'm actually going to go and place a bet on the stock. And this is where options come into play. So let me go to the trade tab, and instead of buying the stock, I am going to show you a whole nother way of trading that most people are not aware of. This is called the options market. Watch. If I open up one of these option chains, and here, let me just change the strike prices to 10. Look at this. This is nothing more than bets. Or a better way to look at it is these are insurance on stock. The main difference between a stock and an option on the stock is that options expire, right? When you buy an insurance policy and you don't get into an accident that month, that premium that you paid just went into the insurance company's pockets because that option expired. Or if you want to buy life insurance for 5 years, if you don't die, guess what? All those premiums that you paid goes into the insurance company's pockets. Why do you think insurance companies have the biggest buildings in Manhattan? Why do you think casinos have the biggest brightest casinos in Las Vegas? It's because they put the probabilities, the statistics on their side, not the other way around. Because when you're gambling, you have lower probabilities of making money. But if you're on the other side where you're selling, that's when you have the edge. And I'm going to show you a method where you can sell options just like the insurance companies month after month so that you can generate an income consistently over time. And if you know the power of compound interest, which is what Albert Einstein said is the most powerful, the eighth wonder of the world. Compound interest allows you to grow your money exponentially over time because your account is growing bigger and bigger and you're earning interest on a bigger base, right? As you're making money and you reinvest your returns, your interest is going to grow exponentially. That's why if you guys want to join my challenge, I'm going to show you how to turn $5,000 into $50,000 in 5 years. Do you guys want to see how? Here, let me just quickly show you. Here is what's called a compound interest calculator. And this is straight from the government, right? So just go to investor.gov and let's say this is the challenge that I'm going to propose to you guys. I'm going to allow you to look over my shoulder and watch me trade my high probability method using just a $5,000 account. And we're not going to contribute anything. We're just going to start off with $5,000, keep it in there for 5 years. And I'm going to show you a powerful compound trading strategy where you're selling bets. You're the casino selling these bets that a lot of suckers or gamblers like to make. So the rate of return is about 3% per month. So 3% of $10,000 is $300. That's $300 a month. 3% of $10,000 is $300. So 3% of 5,000 is going to be 150. So here, interest rate, we're going to say 3% a month times that by 12 months is 36% a year. 36% a year is a big number. Most people would be happy to get 10% a year. But if you can learn a strategy that allows you to generate 3% a month by placing only 5 trades a month, would you guys be interested in learning that? Well, that's what I'm going to show you. So let's calculate that. Oh, 5,000 in 5 years grows to 20,000. My bad. My goal is to actually start off with a $10,000 account. And in 5 years, with a 36% interest rate, this is my challenge, where you start off with 10,000 over 5 years, earning 3%. Your 10,000 will grow to almost $50,000. This is what's called the power of compound interest. And this is what I teach my math students in my math class. I'm also a high school math teacher. So I'm able to trade while I have a full-time job. Just like I showed you earlier, you could just set it and forget it. You can place these trades in less than 5 minutes a day. If you just look at the markets, spend maybe 5 minutes searching, another 5 minutes building the trade, and then just let the rest take care of themselves. I'll show you how you start off with $10,000. You don't contribute any more money into it. You just let your money compound month after month, and you'll see $10,000 can grow up to your total contributions, right? Grows to $46,000, and you only contributed $10,000. You never put in anything more. You're just letting your money compound. So that is what I propose to you guys. If you guys want to learn how to be a master trader, how to take the probabilities on your side, how to master your mechanics, how to use psychology to make sure that you're not emotional, and then how to tie that all into a process that you can follow step by step, make sure you guys subscribe to the channel. I'm going to give you a tip. I'm going to give you a tutorial. I'll give you a tactic every day. And if you guys go check out the website, let me just quickly do a quick plug here. I created what's called the Netflix of trading. And you guys might say, what is the Netflix of trading? Well, here at Your Daily Trading Coach, this is what I've been working on for the past 5 years. I used to be a gambler. I used to trade and lose all my money and blew up numerous accounts. And I asked myself, what is it that makes professional Wall Street traders profitable? And I was lucky enough to meet the #1 options trader, most famous options trader, Tom Sosnoff. He created the Thinkorswim trading platform. He created Tasty Trade. The biggest companies, Charles Schwab, TD Ameritrade, they bought his software because it was the #1 out there. That's what I was just showing you, was the Thinkorswim platform, which is owned by Charles Schwab. So I was able to create a simple step-by-step method so that you don't have to learn all these indicators. You don't have to listen to the news and figure out what's going on. All you're doing is you're following the recipe, the blueprint that I created. And just really quickly, first, I'm going to walk you through the stocks. Why do you need to know about stocks? Because you need to know how to read a stock chart. You need to figure out what direction do you think a stock is going to go. And to do so, you need to look at the past. What was the past price compared to the present? What is the present price in relative to the past? Then you use that to predict the future price. Once you know how to read a stock chart and how to look at price patterns, now you can recognize and identify opportunities. But like I said, most people don't have enough money to buy stock. And even if I did have the money, I wouldn't want to buy stock. Why would I want to tie up so much capital when the second step is to learn option strategies? Remember, options expire. So if you know that options are just expiration contracts like insurance, why not learn how to sell insurance? Why not sell options on stock and generate income month after month? And you're being more effective and efficient with your capital, right? Here, let me show you quickly. Instead of, what did we say? $21,000 to buy 100 shares of Apple? Check this out. If I thought Apple was gonna, I don't know, say go up to 220, I could buy it for $8.20 a share. Let me show you. Here, if I'm buying one contract, oh, actually, this is in increments of 2. Let me just put 1 in there. If you guys don't know anything about options, just know this. One contract controls 100 shares. You're not buying the shares, you're just controlling it. Just like when you buy a house, you just put a small down payment, maybe 10% down. But you're controlling the entire $1 million house. And if that $1 million grows to like 1.5 million, but you only put 10% down, you're leveraging your money. That's the exact same thing with options. Look at this. You're only putting $8.20 down on the stock. If you click confirm and send, guess how much you're paying? Your cost on this trade is only $820 versus $21,000 if you were to buy 100 shares, right? So, right, how did they come up with $820? You take $8.20, right? This is the option, $8.20, multiply that by 100 shares. That's why it costs you $820 to control this asset. And if the stock goes above 200 and what is that, $20, you can start to reap really big rewards. But check this out. I'm going to show you that the probability of this actually happening is very low. So here, each one of these stocks has a probability of making money, because if a stock needs to get above 220 and it's only trading at 209, well, it's going to be less than 50% chance, because when you buy a stock, it has a 50-50 chance of going up or down. But if you're buying a stock that is out of the money, which means that it needs to get all the way up to here for you to even start to break even, well, look at this. This only has a 35% chance of getting there. In how many days? This option has 84 days. So that means it's going to expire. This bet is going to expire in 84 days. And if the stock does not get above $220, you get to collect that $8.20 premium, or $820 for one contract that you're selling. Now, is this starting to intrigue you a little bit? Selling insurance on stock. You don't have to sell 84 days. You could sell as little as 7 days, 14 days. Look at this. This is just one big casino, right? Most people have no idea. They just know how to buy and hold, buy stock. Why not take the curtains away and look at the whole world of trading? Millions of contracts are traded in the options market. It's so liquid that you could buy something for, or right now the market's closed, but the spread is 1, 2, 3 pennies wide, meaning you could buy something at $5 and then go sell it at $4.95 right away, or even tighter than that. That's how liquid these markets are. So that's just a brief overview of what we have to offer, what I'm gonna teach you guys. And if you guys are interested, I'm gonna be holding weekly webinars, also gonna release daily videos for free. All you gotta do is register, and this over Zoom, you just go in here, ask questions, whatever, and then I'll take you to my trading room. Here's where I actually trade, and I teach students how to analyze the markets, how to identify opportunities, and then we can all trade together. You can look over my shoulder, learn, watch, and then trade. And then if you need somebody to help coach you, that's where I can come in and be your coach to help you set a plan, set a goal, create a specific plan, which is the method that I use, and then most importantly, how to execute that plan. Because a lot of people can have a great set of rules, but once your money is on the line, that's when it all starts to fall apart. And that's where the discipline of actually following your rules is where the rubber meets the road. And I'll be your coach, just like a health coach or going to the gym. You need someone to help motivate you, keep you on your strict diet, how to track all your trades in a journal, just like you're journaling how many calories you eat. If you don't treat trading like a business, it's not going to pay you like a business. If you treat it like a hobby, it's going to pay you like a hobby. So that's where I come in. We're going to place 10 trades together so that you know how to trade with confidence right off the bat. Avoid all those bad habits and start off with good habits, because the hardest thing to do is to break a bad habit. So I'll end it with this. Trading is simple, but it's not easy. It's actually one of the hardest things you'll ever do in your life. Trust me, I've been there. It took me over 10 years to figure out what to do, and most importantly, what not to do, to keep you on track so that you can be profitable over time and build wealth over time. So with the proper education, the proper tools, and the proper mindset and mentorship, I can't guarantee you that you'll make money in the markets, but I can guarantee you that I can lead you down the pathway to make money. The rest is up to you.